I'd like to welcome our next panel on stage. And for that, I would like to ask Maximilian Bruckner from 21E6 Capital to join me. He will be chairing and moderating the panel on investing in crypto and decentralized finance. That's how easy the title could be. Welcome back. Stage is yours.
Well, I would like to invite all of my other panelists on stage, of course. So we have Fabian Kroll from Casuria, Oliver Rummel from DFX Swiss, Joshua, who flew in all the way from New York for her seat on this panel today from Linklaters, and Dr. Oliver Winn, so two Olivers today from Börse Stuttgart. Okay, nice. Full round. So our topic today, investing in crypto and decentralized finance. I think looking at the panelists, I would like to focus on decentralized finance for this panel, and I'll give you a chance to introduce yourself all in a second, because I think we have some interesting different perspectives on the same topic. But the first thing I want to start with, and you can introduce yourself as you, I guess, answer the question, is how would you define investing in decentralized finance? If I buy a Uniswap token, am I invested in decentralized finance? Or do I need to participate in a protocol? Should I be a liquidity provider? Or, it goes all the way to building strategies across different protocols. Where do you see the line there? What's investing? What's participating? And what are we talking about today? And Oliver, you feel free to start.
Yeah, cool. Hi, everybody. Thanks for having me. I'm Ollie, co-founder and CMO of DFX Swiss. So we are, as DFX, fiat to crypto and crypto to fiat on and off ramp. That means you can either buy or sell crypto through DFX in a very easy way. And yeah, the question is very interesting because that's why we founded DFX. So the access for the normal people to crypto is very difficult, especially to DeFi. So maybe you have the chance to get into Bitcoin or something else, but you always have to register through a central exchange. And it's very complicated for the average Joe out there to invest into crypto. And that's something we solve at DFX. And yeah, that just with the ease of fingertip.
Hi, I'm Josh Klayman. I'm from New York, but more importantly, I'm from Linklaters, which is a global...
Die Fahrzeuge mit dem Kennzeichen SWA-ST34 und FN1766 werden gebeten, bitte umzuparken. Vielen Dank.
Should we translate for you?
I'm just going to take it as a warm welcome.
Yeah.
So I don't speak German. But I'm from Linklaters, which is a global law firm. My role there is I'm one of our global tech sector co-heads, and I'm US head of fintech and head of blockchain and digital assets. My focus is generally on US regulatory. So I'll say it probably from what I imagine a US regulator would say, although of course I would never speak on behalf of a regulator, and I would never give investment advice, and I will not give legal advice on this panel. But I will say, in my view, if you're purchasing a token associated with DeFi, you are investing in it. You are an investor. I think a really interesting topic that I think we'll get to a little later, perhaps, is the idea of when do you actually go beyond investing to actually being responsible? So I think that's something we're still discovering.
Cool. So my name is Oliver. I'm one of the MDs of Börse Stuttgart. And Börse Stuttgart, as most of you probably know, I think it's fair to say Börse Stuttgart is one of the pioneers in crypto investing in Germany. So, and by now we cover really the whole value chain from, with Bison app, we have a B2C app with a couple of 100,000 active investors. We have BSDEX, which is our digital marketplace, and we have BlockNox, which is a custodian. So I think we have the whole value chain, and we also have our own development unit with over 60 people developing all this kind of stuff. And for us, of course, as Börse Stuttgart, regulation and all these things play a big role, right? So it's, I think, very, very interesting for me to discuss here about decentralized finance. That's a difficult question, to be honest. You asked at the beginning. I mean, for me, let's try it with a layman answer, sort of. So for me, I would call investing in decentralized finance probably when you have nobody anymore to call when something goes wrong, right? So that's, to a certain extent, I would say what we do with Börse Stuttgart, it's not really decentralized, right? Because there's always somebody you can call and talk to.
Like you.
All right, hi, my name is Fabian Kroll from Casuria. I'm the CEO and founder. Casuria is a data as a service platform for DeFi, specifically for DeFi. And we are more or less building a simulation backtesting tool for nested DeFi strategies and a platform that brings together users, enthusiasts, companies, teams who want to use this data service, the protocols and platforms themselves who are building value in the community and who would like other teams to use their data and make value of it. And thirdly, crypto native, crypto near, and in the future also then TradFi companies who want to take the other side and understand more about DeFi and then connect via APIs to their proprietary systems. So that's our vision in a nutshell. And to answer your questions, we are specifically looking at nested DeFi strategies. So my answer is very straightforward. Investing in DeFi for us is using a token as a productive asset in protocols on chain. You can take three sides in the market. You can be an investor, you can be the customer, and the beauty of DeFi is you can also be the supplier in the market. And with DeFi, you can take all three sides, but specifically the supplier side is what we are looking at if you're investing and using DeFi tokens as productive assets. So that's my answer to this question.
Thank you. So now with the introductions out of the way, so to say, we can get into the nitty-gritty. I think very interesting perspective on the regulatory side, but also to go in onto what you said, Fabian, right? So you say that there's three kind of people in the ecosystem: customer, investor, and the supplier, right? And Joshua, you mentioned that, well, at what point am I responsible also for what's going on in this DeFi protocol? And I know we spoke before, and there's, I mean, some interesting situations with what happened with Tornado Cash, for example, but there's also some other examples coming from the US regulatory side. So should there be a differentiation maybe between investor, customer, and supplier in this sense, as far as their responsibility goes in being a part of a DAO and making decisions that may reflect back on the regulatory kind of, well, enforcements upon that DAO, or it's kind of all the same, well, you bought the token, so you must be part of it. Is that a considerable risk to people wanting to invest in DeFi?
Wow, so that's a big question. So let me first say, the US is still trying to figure out its regulatory landscape. So we could spend a lot of time on that, but we won't. But what I would say is, you know, one of the challenges has been there are some people who are true believers in decentralization. And then there's been a ton of decentralization theater, I'll say, because of the way the US regulators have said, oh, well, if something is sufficiently decentralized, right, then you may not have a security. If you don't have an active participant to look to, then you may be okay. And what this has led to now is regulators getting really frustrated because there's no one that they can go after necessarily, because someone says, oh, it was a smart contract, it wasn't me, there's no one here, and there's always someone there, right? And so they're trying to figure out, okay, if we're gonna go against people for writing code, then people who have free speech say code is speech, you can't do that, right? Other people who may be holding tokens, you know, if you look at UkiDAO, which I believe is what you may have been referring to, the CFTC held liable an LLC and its founders, and then it said, by the way, this DAO is using the same smart contract. It's a successor in interest. And so they decided to go against the folks who are actually using the governance tokens. So that's being litigated right now, and there are defenses to that. But I do think, I mean, the question of whether you should divide into three, that's way beyond where we in the US are. We're just trying to find one.
I mean, if I try to answer, anybody who has ever tried to get a license from BaFin probably knows that there is a difference between a supplier and a customer. And I mean, you can discuss whether maybe regulation is too strict or not. I'm a big believer, to be honest, in regulation, because I truly believe that good regulation is the basis to make crypto and decentralized finance a mass market product. Otherwise, it will always be a niche. So I'm absolutely in favor of it. But I mean, to answer your first question, right? I think for sure suppliers have different responsibilities and much more regulation around it and so on. I mean, we also have the topic of consumer protection, I think, involved here and so on. So whatever. But for me, there must be a difference between these different players here.
So I guess as a follow-up question to stir the pot a little bit, would that not mean that let's say I, as a private person, right, I decide to become a supplier in the sense of I provide liquidity to a protocol, I start to participate really in the governance there. Would that not kind of break the spirit of DeFi? Because now I, as a private person, I'm a supplier in the eyes of the law. So now I'm kind of being extremely discouraged from even participating in the entire system. So maybe we could say that, well, regulation is too strict on that, especially for retail customers, let's say.
Sorry, I mean, maybe it's really the definition of supplier here, right? Because in my understanding, in your example, you would also be a customer, right? I mean, because look at normal banks, right? Also, normal banks are taking deposits from customers in the end. So you could say these are also suppliers of liquidity. But in the end, you have this middleman, which is for me this is the interesting thing, right? Because what is today the regulated middleman is now the smart contract, and then we're coming to Joshua, what you said, right? The question: how do you get hold of the smart contract if necessary?
That's a fair point. I mean, Oliver, I'd like to ask you, of course, on your view on the matter, since you're really at the bridge, right, between the traditional finance or also the retail customers and everybody trying to get into crypto as well as out of crypto. What are some approaches you see there?
Yeah, I would start earlier, right? So we are now talking about everybody who is in the space, but there are so many people who are still not in the space. Why aren't they not in the space? It's just way too complicated to invest into DeFi. So they don't care about being a supplier or a customer. They just want to invest. And that's not just the retail investors, it's also the institutions out there. Yeah, and I'm a big fan of non-custody. So everybody should have their own coins and should take care of everything they're doing on a financial basis. And yeah.
Okay, it's a good different view. So then, I mean, let's take a step back from regulation for a moment and focus more on investing in DeFi in that sense. I mean, we can look at the market right now. Maybe there's some interesting insights. I know, Florian, you obviously, as part of your job, you must see a lot of different strategies. What are some of your insights right now in the DeFi market and what's going on there?
Yeah, I mean, a little bit of a backstory from us maybe. When we started, we focused heavily on the institutional side and wanted to provide data for the institutional side, and then quickly found out that it's a long way to go. And that's why we pivoted in our story a little bit more to the Web3 world and want to build for Web3 and the community first. And if you discuss with traditional finance players and with banks and everything, you realize that everyone is just looking at crypto assets. No one is looking at the technology behind it. So everyone tries to fit the existing systems towards, the new assets and tries to make them exchangeable and tradable and investable. But what people don't understand is that this is a deep technological disruption behind it. I totally diverted from your question, right?
No worries.
But this is what we see. And in terms of the market, yes, there's a huge dip, of course. But for us, if we talk to the teams, you see through the bank, you see it's building time. I mean, it's a little bit cheesy to say that because everyone says it, but it's really clearly you can clearly see it in the market that everyone's focusing on building and innovating and developing something new. And this is also a good time for us because we are trying to build that bridge and overcome the gap. So there's advantages and disadvantages to it, but we clearly believe in the next bull run.
So if there's more building going on, there's also more interesting times for regulators coming up ahead with new ideas. Okay, and of course you mentioned, right, that it's still very difficult to invest in DeFi. And I mean, Florian, I know your tool and it's amazing, but I think as someone who's new to the space, who's just a retail customer, right, it's just a lot of information, no matter how you present it. So maybe we can also get kind of a round of ideas on how people should start investing in decentralized finance, because I mean, a lot of people probably don't understand impermanent loss, so maybe they should start a little bit more basic. What are your thoughts on the matter?
So may I divert from the question a little bit, because I can't advise
on where you
people
go.
to invest in crypto. But what I can say is that if you look, not from a regulatory perspective, but from a deal perspective, if you look at the documentation, I think that's where people need to really start, is to start reading the documentation. Because right now we do have, funds and other professional investors, as well as others who are looking to invest in DeFi, right? They're excited about it. There are questions that are regulatory in nature, like how do you have a qualified custodian under US law, for example. But a lot of these documents, they're bespoke. And people, while they say, okay, we're gonna put these funds into the smart contract, I'm gonna get some LP tokens and certain other things, and people are saying, oh, don't lose your tokens, it's all, but at the same time, they want to have what we call belt and suspenders, or I guess in the UK they say belt and braces. I'm not sure what you guys say here. But to have the written document too, and the two don't go, right? You want all these remedies and they don't go.
Yeah, if I may follow up, it's actually, we do a lot of research deep into the protocols, and we read code bases, we read white papers, and often we have to go into Discord channels to actually talk to the developers, and then we say, look, there's a gap between what you documented and what we find in the code base, so what's the truth? And often it's like, yeah, I don't know, we just build it and it works, so, okay, and that has to change, obviously, so, yeah, that's not a one-off. We found that through the bank in big, I'm not mentioning any names, but in big DEXs that are on the market.
And I mean, you have the capability to do that because you understand the code and you understand what's written in the white paper, but, as somebody who's new to the space, you're not going to understand either of it, probably.
That's true, yeah.
So maybe that's something you're trying to solve, right?
Yeah, so that's what we try to solve. So you touched ground on impermanent loss. I guess a lot of people outside our bubble don't know what impermanent loss is, right? So they just, in case they want to invest into DeFi, they maybe find something about where they can invest, but then they have to go through central exchanges and buy maybe one, or when it comes to liquidity mining, two tokens and invest and send them to some other website or whatever to invest into crypto. And I guess that's the point where this big block for mass adoption for DeFi is. It has to be more easy. The average Joe does not have to handle about blockchain tokens or whatever. They just need to see, okay, there is a possibility to invest. I only want to send one band transaction, for example, receive the respective token, and start earning on it. So I guess that's one of the major problems that we at DFX currently tackle. So we will provide kind of a MetaMask marketplace where you can buy, sell, and interchain swap crypto on Ethereum and Binance Smart Chain. So all the tokens that are available there. And you can also buy liquidity tokens directly. So you really take out all the complexity for the customer. And yeah, not just for the retail customers, but also for the corporates who want to invest into DeFi.
All right, and then maybe I can add to this, because I think if I look at the success story sort of of the Bison app, I mean, what is the success story? The success story is that in 2018-19, what you build is an app that allowed customers to very easily invest into crypto. Then we built something where they don't have to care. It's a custodial thing, so they don't have even to care. It feels like online banking, right, for the customers. Plus a trusted brand, somebody they can call, right? And I think this was the success that made a couple of 100,000 people become crypto investors. And I think that's interesting. We heard in the presentation before that especially the millennials and so on, are investing. I mean, if I look at our customer base, we also have them, but we also have the 40, 50, maybe even 60 plus guys, right? And it's like always, like you have when it comes to investing, maybe it's a little bit fewer, but they invest much more, right? I mean, they invest the much bigger tickets, and but they don't care so much about technology, and they might even be certainly frightened a little bit. So I think it needs this very easy solution. And I'm just telling this because not only because I'm a fan of Bison app, that's for sure, but I'm telling this because I think it shows that what it needs for mass market adoption, right? And I think this is exactly the same thing for decentralized investments. We need this kind of easy access, we need the regulation, we need the trust, and then we will attract the more normal investor and not only the nerds.
Yeah, and maybe to follow up on that, so the Bison app is a great app. I also used it back then, but it is the light version, right? So you are not having the keys, and that's, I guess, the next step forward, where more and more retail investors and corporates want to have the keys, so they want to have their financial self-determination, let's call it like that. And yeah, I guess that will be the big thing on the next run-up.
So how much can you really simplify a DeFi investment, though, with it still being decentralized finance? Because what you're doing is, right, you're introducing a centralized intermediary in almost all cases. I mean, look at what happened with Celsius as well. So maybe a question to everyone on the panel: where should we draw the line between not only centralization and DeFi, but also how simple should we really make it before we're really putting the customers in danger because they're investing into something they don't understand at all just because it's easy to do so?
Yeah, I really don't like that word to put a customer into danger. So I'm totally behind. Everybody should take care of their financial situation, be it a retail or corporate investor. So yeah.
Plus, I mean, I'm totally with you, and I would say if you want to protect a customer, and this is probably, it is an important topic, right? But then you don't do this by making the technology complicated. I think then you do this by being transparent in terms of what is the risk-reward profile and so on. So
yeah, I guess educating people is the right word for that. Exactly. So not just saying, hey, this is a blockchain, but why is it blockchain? What comes with self-custody? I guess that's a big point.
Very true. I'm sometimes a little bit torn between this position and another position where I ask myself, is there something, a generation growing up like the digital natives that use their smartphone since they are 4, 5, or maybe earlier? And if I look at my grandfather, a couple of years ago when he started to use the computer, there was no connection to it whatsoever. So I'm asking myself, is there generations coming up that use DeFi in the complicated way, like it is built now, and they understand it to the full extent, and we just, there's a generation growing out of it that will never understand it. So, but I'm torn between these positions because you need, for the market to catch up and to gain some momentum, you need also these guys on board. And so I often hear the term DeFi mullet. Have you heard that before? So you have long hair in the back and short hair in the front, and in the back there's all the technology and all the complicated stuff happening, but in the front you have the business hairstyle, and regulation is, you don't see the regulation layer, you have just a nice front end that works for you. So that's a term I often hear, if we need the DeFi mullet to work,
Yeah, and sorry.
No, go ahead.
No, I mean, just one thing, because I really don't believe in it that there is a new generation coming up. I'm totally believe, of course, new generation, new technology. I mean, for sure. But actually, one of my former CTOs, I mean, he did some kind of teaching, right? I mean, for school to teach programming. And after half a year, he was quite frustrated because his observation was that the young generation is so used to Apple and just clicking that they were not even aware anymore what a file system is, right?
Might be true, yes.
And so I don't believe the young generation is, obviously they're totally used to using technology. They might have the trust in technology. I think this is a very important point, and we saw this in the presentation before. But I doubt that this new generation is so tech savvy that they're all of a sudden go onto the blockchain. I think also for them it's super important to provide them with a convenient Apple-like interface, and that's what they want.
Maybe the concept of holding your own keys and being responsible for this, and knowing that if you sign this transaction, you cannot reverse it. I think this is maybe a mindset that grows into this generation. So that is already a base layer, that is knowledge that 90% of the population.
Yeah, sure. I can see you're burning.
Yeah,
to add
I'm trying
something.
to be. I mean, I have some. I don't know if it's controversial, but you know, like when we say simplify the technology, we need to simplify the words. Like people need to be able to understand. Like if you went to Celsius's website, it clearly said in the terms and conditions, well, not really that clearly, because who knew what these words meant if you're retail, right? But saying that they could take title to your assets in their own name, rehypothecate them, things like that, that people didn't really understand what that meant. So I think that's part of it. I think also, and I say this a lot, like in a lot of times we'll say, okay, it's not personal, it's business. But like I said, as I often said, and people have heard me say it today, in our industry, it's personal and it's business. And understanding who the players are and what the politics are in the space is relevant to the performance in some instances. And I think also another thing just to bear in mind, and this all goes to disclosure, right? So to put on the regulatory hat, right? If you think about what happened with Terra and Luna and all those kinds of tumbles that, you know, the reverberations, and we're still trying to figure out, you know, the applicable laws there. Part of what got hurt, obviously, was retail, right? People didn't realize they'd be stuck in their positions, right? And then when you have hedge funds and others, which we love, right? But also coming from outside of the industry and shorting all the way down, like people don't understand that. So that's why I'm saying, like, simplify the words in addition to the technology. And by the way, I'm very pro-crypto, but just...
The other question is, how many people even read the T's and C's of someone like Celsius, right? I mean, you get a software update on your phone. Yeah, I agree, sure. I'm sure it was probably the same for a lot of retail customers there.
Yeah, I just wanted to follow up on that because so of course everything's very complicated for outstanding or for people outside or all bubble, right? And it starts with the word wallet. So you have to connect your wallet. So if you are, so the normal people, the wallet is something you hide, right? You don't connect it to something. And I really think it starts right there. So we maybe have to kind of change those words and make it more easy for people to understand and also to cut fear at the beginning.
I think a good start to our closing statements. I think we're getting short on time. So if anybody has 2 more sentences they want to get off their chest, feel free to do so. Fabian, I'm holding you to wearing a mullet next time we see you here.
Working on it.
But if not, then I guess we can open the floor.
You want to start?
Ladies first.
Sure. I mean, I would say I think there's great promise and opportunity with decentralized finance. I mean, Bitcoin itself is a form of decentralized finance if you really take it to its base. But I think we have to also bear in mind that a lot of times retail is the exit liquidity for the professional investors and making sure they understand that.
Yeah, so for me it is, let's make it as easy, as convenient for the mass market to join our bubble. I guess that's key to really get mass adoption for crypto and DeFi.
Cool. Yeah, maybe let's end with a positive outlook, right? So I mean, during all this like crypto winter, no, I mean what I maybe want to point out is that I do not only believe as an optimistic believer that this will be over soon. I think if I look into the data, if I look into our customer base, I think the interesting thing is that actually first of all, our existing customers, they really, nearly every day, they buy net, right? I mean, there are very few days since the beginning of the year where they net sell. So I think this is super important to understand how the base is still correct. Then I see a lot of institutional business right now, right? I mean, I mentioned BSDEX before. I mean, we're talking to so many banks, institutional players that use the time right now to build, to be ready when the next bull run is there, and their customers ask them to provide something, right? And then the third thing I think which is important is regulation is becoming much clearer now, right? I think we have in Europe, we have MiCA, we have travel rule, we have others. I think there's a lot of regulatory uncertainty is currently going away. And I think if I take these three things together, I think this is a very, very strong base for cryptocurrency investing, but also for DeFi investing for the years to come.
Yeah, and if you take more of a macro position and look from a high level, I think DeFi is here to stay. For me, it's just the natural extrapolation of what happened in the electronic markets over the last 40 years. And all dips and bull runs aside, this is deep technological disruption and taking out the last middleman. I mean, in the 60s, you had to have a team of, I don't know, 10, 15 lawyers to write an option. First time it was ever possible, I think. And now you just buy, an option around the corner with your smartphone. So this will be the next step. Everyone knows that we are at the beginning of this. The TCP/IP protocol has just been invented. If you compare it to the internet, and nobody knows what's happening in 5 years. But I think I strongly believe it's here to stay, and it will be a logical extrapolation of the history.
Thank you.